Christopher Swift became CFO of the Hartford at the height of the financial crisis, just a few months before the venerable insurer received a $3.4 billion bailout from the U.S. Treasury's Troubled Asset Relief Program, better known as TARP. A CPA by training, Swift has worked closely with Chief Executive Liam McGee to turn around the company, getting out of the capital-intensive life insurance and annuity businesses to focus instead on growing the Hartford's profitable property casualty operation. Given their success, it's little wonder that the analysts surveyed by Institutional Investor selected Hartford Financial's Chris Swift as one of America's top executives.
I arrived in the company 4 years ago, March of 2010, really with Liam McGee, who arrived 6 months prior, who's our CEO and chairman. And we really set about to fix the Hartford, to improve it, and ultimately restore it back to its glory. It's such a great company with a long 203-year history. If you look back through 2012, the Hartford was committed to being a multi-line. And when Liam arrived, we were a multi-line. We had just been through the financial crisis. We were a TARP recipient. And we set out about setting, I'll call it, stages and goals, milestones that we wanted to achieve along the way. The main strategic move was in March of 2012, when we decided to focus just on 3 go-forward businesses, which was really property and casualty, group benefits, and mutual funds. And anything related to what we now call as Talcott, which was annuities, life insurance, and retirement plans, we ultimately exited or are running off. One of the keys in property and casualty business is to understand what point of the cycle you're in. And right now, I would say we're in a good phase of the cycle where we are getting closer to adequate returns and rates. And we've been pushing a lot of rate into the book to offset for the low interest rates that we're experiencing over the last 5 years. Weather patterns are very important to our business, and understanding, again, cycles. We go through different phases, but clearly over the last 5 years, we are in an elevated cycle of more frequent weather patterns, particularly here in the U.S. I would say in the Midwest as it relates to thunderstorm, hail, tornadoes. And it might sound surprising, everything that's happened from a weather event in the last 5 years is well within sort of the range of possible outcomes that we planned for, that we managed to, and ultimately how we set rate from where we need to collect from policyholders to pay for catastrophes. We're in the business to pay claims, right? I mean, that's what we do. I mean, we're there to respond for unfortunate events, disasters, and that's why people pay premiums in advance so that we could respond. So it's just part of our business. I think when Liam and I talked particularly with the board about growth, I mean, we always think in terms of first and foremost organic growth. It's usually cheaper, it's controlled, it's more balanced and measured. But as we look forward, inorganic growth is becoming an increasing topic, along with, I'll call it, acquiring skills in major moves that we don't have today. I mean, there's part of the commercial property and casualty space that we don't play in today. We think we have the brand. We think we would have the market acceptance to play in there, but we would have to go out and build those capabilities, and there might be ways to accelerate that acquisition of talent. There's something special about the Hartford. I have been associated with a number of different organizations, but people really like doing business with the Hartford. They consider us part of an extended family, and we are there for them. We take that responsibility very seriously. So I think we can always grow the brand more, continue to invest in it, but more importantly, protect what it means.